What's going on, traders? It's Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is May 14th, 2021, and it is Friday. TGIF, please click the like button on this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today, we're going to be talking about the price action, the indices, as we always do. We'll go under the hood and check out our sectors and style factors. We'll talk about some of my trades for the day. Whoa! And then last but not least, we will check out some options order flow. Before we jump in, quick risk disclaimer, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades. All right, let's jump into it here. So we had another, basically like a continuation day of this relief rally. We had S&P 500 close up 1.54% as measured by the SPY. We had the NASDAQ QQQ finish up 2.21%. We had the IWM small caps, wow, which are actually our biggest winner, close up 2.44%. And then we have the Dow Jones close up 1.12%. So really bullish day all around. I was posting some of these indicators this morning for Pristine Capital members, just in our group, and we were seeing all these indications of like, oh my gosh, everyone is incredibly bearish here. So we had put to call ratios just looking absurd. We had the CNN Fear and Greed Index, at a fear gauge. I saw that there was a stat. It was Daniel DiMartino Booth that put this one out, really cool, and it was showing that the Direxion, like 3 times levered bearish ETF on the semiconductors, it was like record call volume or something. It was kind of crazy. So yeah, pretty much like, we had a really bearish sequence here, and it was for, a really legitimate catalyst, the inflation catalyst, so on and so forth. We've been talking about it, but at a certain point, and this is where I think a lot of newer traders can get really thrown off, because with a lot of newer traders or even investors too, they invest or trade based off of narratives. And typically, this is the part that a lot of people don't realize. Pretty much financial commentators, what they do is they look, oh, what's the S&P 500 doing today? Oh, it's down? Why is it down? And then everyone has to come up with a reason to try to explain why it's down or up. A lot of times, like, how would anyone actually know what's going on behind the scenes? Like, sometimes there is a very obvious catalyst, but other than a catalyst being a trigger for selling, once the selling is done, then the selling is done. Like, for instance, this catalyst of, hey, inflation is rising. Okay, everyone reacts to that catalyst, but then when the selling is done, then the selling is done. And then, if everyone's loaded up on put protection at that point, because everyone gets really scared, then you can have these snapback reactions. And there will be questions like on a day like today, but what about inflation? Like, I thought inflation was really bad. Like, I just shorted the market, like down here on like the 4th day of the pullback. And essentially it's like, that was a pretty big catalyst. It could still impact us in the future, but we just have to trade what's in front of us, and that's, 2 huge green candles. So you can see, so yesterday we tagged this 50, we held it, we undercut it, and then we closed inside of this monthly value area. Now today, I was not expecting this candle to extend this far, to be quite honest, but we closed above the 5-day EMA. Now we're above the 20-day simple moving average as well. And now we're above the monthly point of control. So if you leave the narratives behind and you just think about what the price action is doing, look at this prior range. Now instead of like, oh God, ugly sell-off, like is the market going to correct, 20%? Now it's like, okay, now we're just right back within the range that we've been in. And I think this is even more apparent when you look at the weekly chart. So looking at the weekly chart, it's like, okay, we had a, corrective sequence, and now here we are, we're above the 5-week exponential moving average. So in the grand scheme, like, this is just typical price action. So yeah, really interesting. Definitely, a really challenging week to trade. That's for sure. Um, so yeah, definitely, some pretty crazy price action. But at this point, we are heading up this monthly valuer. So I would expect at some point next week, anything can happen. But at this point, we have this value area high here at 41.93. Could we test that value area high? Absolutely. So definitely want to be open-minded to that. Then if we look at the NQ, NASDAQ is still looking pretty broken. This one, even though we've had two nice green candles, we're still below the 50-day simple moving average. So it's a little bit tougher to get, extremely jazzed about the NASDAQ. Russell, you can see we're inside of this monthly value area right now. So yeah, the Russell, it was like, oh my gosh, this is where it's going to fall into the abyss, isn't it? Myself included in thinking that could happen. But now we're just right back in that chop zone. So we'll have to see if it can hold this next week. And then Dow Jones. This one I actually thought, we got a miss on the retail sales data this morning. So I thought some of these cyclical stocks could really come under pressure. But the price action shows, that didn't end up being true. So on this one, this is literally, technically the most bullish of the indices here. We're above all the key moving averages and we're above this monthly value area as well. So yeah, Dow Jones still very strong. And we had Disney report earnings, which is a Dow component, and it missed and had, it was down a couple percent today, and the Dow Jones was still very strong. Let's see Disney, where did it close? Yeah, it closed down 2.6%. Put in a green candle though. All right, so those are our headline indices. And what I like going into next week is I do think the sentiment is still pretty bearish, which is a good thing. So let's see, we have this market recap. Yeah, looking at the market breadth, yesterday as well as today, really nice breadth on this bounce. On the pullback, that sequence right there, we had breadth. It was like 10% advancers or like 11% advancers. It was really bleak. And that's what happens when you get a washout where it's literally just like, okay, everyone's liquidating. There's hedge funds getting the tap on the shoulder and they're just selling off their book, indiscriminately. Now you can see this is a very powerful bounce. It's coming on really nice volume here. So you can see all these indices, the lowest was 83% up volume and the highest was the small caps at 91% up volume. Looking at our FinViz heat map, you can see, broad strength right here. All these FANG names very strong. Facebook was up over 3% today. I took a trade in Facebook. But yeah, really broad strength here. And the semis, which has been, really down in the dumps, really powerful bounce there as well. And another thing, in terms of, just the mechanics of the market here, so the VIX got absolutely demolished. And typically this is how it works. You get a really big outsized green candle, and then it'll be, once the market volatility and the pace comes out of the market, you can't really sustain the VIX at these levels if the market is not, precipitously dropping and there's even more panic. So yeah, we had a big puke in the VIX over the past 2 days. And, that coincides with these big green extended range candles in the S&P 500. That being said, has the easy money likely been made off this bounce? Probably. Because the odds of having a red VIX candle just as big as these prior two on Monday or Tuesday are pretty slim. So, now we're pretty much back inside this normal range for the VIX that we've been in. Maybe if we get a green day on Monday, maybe we kind of rest somewhere around like 17 or something like that. I mean, I guess we could go all the way back down to these lows, so there could definitely still be more to go. But my point is, we had a pretty big contraction in the VIX over these past 2 sessions. Same thing with the VVIX. Yeah, same exact thing, huge pullback in the VVIX. And we'll have to see what happens next week. But yeah, this is telling me like there was a huge panic in the markets. Everyone was rushing for puts. And I noticed like I spend most of my day just watching the tape and watching the options order flow. So I'm seeing sort of like in real time how the options market is ebbing and flowing. And what I noticed like on these days is it was just puts, puts, puts all day. And typically the market is not like that. On regular market days, it's primarily calls that I see going up. There's puts as well, people hedging, but it's never just predominantly like arc puts, arc puts, arc puts, arc puts, like throughout the entire day. And I noticed even yesterday, that's another good indicator for me when the market is so fearful that people take the first green day as an opportunity to just load up on even more puts. That typically I view that as like, okay, sentiment is still really negative. Today was the first day where I did actually see, call buyers coming back in and, much more normal level of, calls versus puts. So really quick, that was pretty long, but I think that's just important in terms of the market color. Let's see here. So we'll go through the rest quickly here because I know it's Friday. Sectors, we have our gold miners at the top of our list, up 2.46%. But you can see, every single sector was green. We had a lot of, bounces in a lot of these really oversold areas of the market. Like you can see the SPAC ETF was up 3.85%. We have the Chinese internet names up. Big bounce within these ARK funds. And we'll see. I put on a lotto position in ARK. See if we get a short squeeze there. See if it happens. Style factors, you can see also, green across the screen. High beta style factor did really well, up 3.06%. And then the cyclicals also did very well, up 2.2%. Yeah, momentum also did well. Really all these groups, very strong across the board. Let's see. We'll take a look at some of my trades for today. Where are we here? Okay, yeah, so for stock trades, I stopped out of my FCX common stock for $41.76. I'd paid $43.02, stopped out of that one in the morning. And that was really just, hey, we might get some, downdraft in the commodities given this weak retail sales number and potentially a rotation. Looks like this one ended up closing pretty strong though. Yeah, this one closed up a little bit on the day. Still looks okay technically, but yeah, I took that one off the books. What else did we have? I took some SE shares long at about 211 and change. SE, I noticed this is one of the higher quality, high growth names where typically once that style factor starts to bounce, SE is one of the names that I notice capital flows to. So you can see this one closed up 7.09%. I left this position on, so we'll see if this one sees some continued strength into next week. But yeah, looking good so far. I took Applied Materials long at around 122.24. This is a name I've been watching for the past couple sessions. Name definitely closed pretty strong as well. They report earnings next week on the 20th. And this is a name that just got very oversold. And you can see we're starting to pivot higher. I wouldn't be surprised if we reclaim or at least test this 50-day simple moving average next week at around 127. So yeah, still, I left that one on the books as well. This one's looking pretty good. Let's see what else here. My EGLX, I closed this one out for 633. I closed out the other half yesterday. EGLX, this is a name, this was definitely a super performance stock. When you look at this chart here, from about 153 over the course of the last year, this stock went from 153 all the way up to 888. And I first got involved with this stock at $4.86 down here. And this stock, I definitely could see this one moving higher, but in terms of trading one of these names technically, I was pretty much waiting. We got this first close below the 50-day simple moving average. And I was like, okay, if we don't make any progress the following day, that's where I'll just stop out of the position and go, hey, that was a nice little run there, but, can't get attached to the name, have to just go with the technicals and kind of, play it from there. See that EGLX stopped out of this one, but this is one that I see there's a VPOC down here at 5.7. I'm actually going to set an alert down there, just in case it ends up hitting that. And this is a very volatile name. Could this just be a shakeout? Absolutely, but I just want to make sure that I'm, managing my risk, being disciplined. And if this one, resumes above the 50-day, I would have no issues buying this one back higher at a later date. See, I took that one off. What else did we have? I took some common shares in this OLN. This is a basic materials name. And this one, the chart just looks, pretty fantastic here. So if you look at this, really tight price action. It's just been consolidating sideways for about 10 trading days. And now we close, at the very upper end of this range. So if this group is strong next week, could this one break out? Absolutely. So we'll see how that goes. I'm going to set an alert here at this prior high. Yeah, so I took a couple shares long. And then for some options trades, what did I do today? I closed out my JPM calls for a small winner here. Closed those out for $9.90. I had paid $9.55 for those. I took some Facebook calls long. And I took the July 310 strikes. Facebook, I just noticed that when I looked at these FANG names, which ones were showing the relative strength? Facebook was one of them. So Facebook closed above this monthly value area high. If you had to ask me, like, okay, the market makes it back to new all-time highs, which of these FANG names is leading? Facebook definitely looks like it is, leading the charge here. See, I took those calls. That one worked out well so far. And then, for my lotto trade, I got long the ARC, May 2800 strike calls for $5.80. I position sized it, for that one to go to 0. And it's really just in case we get a short covering rally. So ARC. I just noticed, talk about everyone being bearish on the same stock or same ETF. This ARC, people like, there's a large swath of investors that really just want this thing to go down to 0, for whatever reason. And this thing's been on a horrible run here. You can see, really broke down. But at this point, I do think it's a pretty crowded short. Closed above the 5-day EMA today for the first time in, about like a month. And yeah, this one into options expiration. I think there's kind of like an asymmetric risk to reward to the upside now. So you can see it's kind of holding in for the past couple days. So we'll see. And we have this 200-day moving average up here at 113. I see what's kind of interesting. Look at this. So the max pain, we closed today at 104.31. Very interesting. For today's options expiration, the maximum pain level was 105. So this was pretty much like a perfect pin at that max pain level where the highest number of options contracts will expire worthless. So I flipped forward. I was like, what about next week? For next week, the max pain level is 118. So I kind of think, like, wouldn't it just be like really interesting if this thing just short squeezed a little bit and just kind of, put all those poor location shorts in a little bit of trouble. So we'll see. That's like my lotto trade for the week. And then, and then I took a Google call spread. So I got long the May 21st, 23.25 by 23.35 call spread for 489. And this is just to see, hey, maybe we get a gap up on Monday. Google is another one where made a low here, held this monthly value area during the sell-off, and now it's inflecting a bit higher. So maybe it makes a run at this 20-day. So we'll see what happens with that one. And then real quick, we'll pull up It's options order flow. Where is this? Is it over here? Oh, there it is. Okay. Yeah, so today was the first day where I started seeing a lot more call activity in a few days. You can see Tesla puts off the open, but then a lot of Tesla call buyers coming in. So you can see these big money too. It's like a couple million a piece. I see Baba, some call activity for that one out to 2023. This was a big order. Let's take a look at Alibaba. Yeah, this one looks absolutely horrendous. I'm guessing they're going for like, this thing's just so oversold. Like, it's so cheap. It can only go up from here. We'll see if that happens or what. So Tesla, looks like some Disney players buying the dip. And then you can see a lot of puts coming in as well. Hedges going up. IWM, SPX. And that's the thing. Like, once everyone gets caught without hedges, that's when it's like, all right, we're going to start being responsible and buy these hedges, like, after the risk event happens. So maybe they'll come in handy. But yeah, throughout the day, you can see a lot of puts going up in these different areas. MLCO, I believe this is like a Chinese recovery name. Yeah, this one also just pummeled a lot of these. We got some QCOM, semis, some Baidu activity. Yeah, and that's about it. So yeah, surprisingly, hedges going up, some Tesla activity, then a lot of activity in these Chinese internet names. So we'll see what they do next week. That about does it for this market recap video. Hope you all had a great trading week, and I will see you all on Monday.